right, the second wave is here. The second wave was predicted, it was feared, but it has now come with such ferocity that it really has spooked markets, investors, and frankly, everyone around the world. Earlier this week, there were fears of a resurgence of COVID cases in Midwestern United States, and now the situation in Europe is only worsening. In fact, there has been about a 40% increase in number of deaths in parts of Europe and pretty much all across Europe just in the last 1 week. Just a short while earlier, Angela Merkel announced an extended lockdown. We're expecting to see something similar in France, and of course, it's had an impact on the markets. Let me just take you through quickly what's happening in the US markets. It's not a pretty sight this evening. The Dow Jones down over 3%, 825 points down. S&P 500 down about 105%, as is the Nasdaq. So between 3 to 3.5% of hit across US markets. Of course, we saw something similar with European markets earlier today. So how deep is the cut going to be? What exactly is the concern? And a little ahead in the show, we're also going to talk about the impact on India. Remember, a significant amount of Indian exports go to Europe. So will there be a hit there as well? But let me begin first by introducing you to our speakers on the show this evening. I have Arnab Das on the show, Head of Emerging Markets Macro at Invesco, joining us from the UK this evening. Peter Cardillo, Chief Market Economist, Spartan Capital Securities, tracking the US markets with us. I'm speaking ahead in the show to Sharad Kumar Saraf, President of the Federation of Indian Export Organization, FIEO, who will give us a sense on what this means for Indian businesses exporting to Europe specifically. And Madan Sabnavis, Chief Economist of Care Ratings, also joins us on the show. So welcome to all of you, and thank you for speaking with us. Arnab, take us through what the key fears are. Because cases have been ramping up over the last few days all across Europe. It was also predicted that cases would ramp up. But is it the pace of new deaths caused by COVID-19 that is frightening?
I think it's a combination of things. I would say, first of all, that the caseloads had been rising gradually and then more sharply for a period of weeks in some countries and then in others as well. Right, so countries that had, let's say, relatively good pandemic in the past have had, more of a difficult time, at least with caseloads, as we've had this kind of second. I don't know what I'll call it, full second wave. I think it's more of a resurgence of the first wave. So I think that is one important part of the fear is the virus resurging itself. But I think the maybe more dominant feature of this fear in the markets right now is the realization that these regional lockdowns or kind of targeted lockdowns at different sectors, different times of the day, that these are spreading and becoming more intensive, more extensive. And so therefore the risk of a new national lockdown has risen, which in turn raises the specter of a double dip. So I think that's really, what's playing through the markets right now.
Peter, what's happening in the U.S. markets? It's been, a bludgeoning sort of a situation for most of this week. Monday was bad, and so is Tuesday. Is this all only about COVID resurgence in Europe, or is there more?
No, it's about the COVID resurgence in Europe, but it's also about the spikes here in the United States. We've had over the past several days a big increment in new COVID cases, and certainly that's the major concern. Then there's another factor in here which is also, I think, weighing on the market, and that is, of course, the possibility of maybe a contested election. There are some states that are very close, and if we were to get one or two states that could throw the elections in doubt, that means a contested election, and it would wind up in the courts, and that means a prolonged period of uncertainty, not knowing who won the elections. And so in the midst of this coronavirus crisis, obviously that would create a huge vacuum of uncertainties, and that would mean that companies would probably hold back on capital investments as they have done in the past, and due to the trade war. And then, of course, it would impact consumers. And if it got to the point where you'd have perhaps uh, partial lockdowns, whatever reopened might be subject to closing again. And so that's another major negative impact in terms of economic activity.
You know, let's take a look at what kind of lockdowns are taking place so far. And of course, we don't know to what extent it will go. But Arnab Das, I just want to get a sense. Prima facie, it seems like the lockdowns are much less severe than what we saw in March, April. So in some places in Germany, for example, they're allowing schools to be on. There are, moderate sort of restrictions which are being put in place. And we have to remember that this is round two. So doctors know how to deal with this better. Businesses know how to adapt better. Would that mitigate some of the fears going forward that this will be a milder sort of economic hit?
Something that people are mulling over and I think is in the market mind as well, right? And I think it's fairly clear that most governments really don't want to go down the route of another set of comprehensive national lockdowns the way we did, sort of back in March or February in the case of China and late January, right? But I think the risk that the lockdowns are becoming more, they're taking place in more countries, in more regions, and affecting more sectors, does raise the risk of a national lockdown to some extent, at least. And I think in addition to that, the other factor here, of course, is that the services sector, the small scale sector, tourism, leisure, hospitality, et cetera, that hadn't fully recovered in many countries, Europe, emerging markets, the United States, right? Those sectors are going to be further, discouraged from recovering by these lockdowns, right? So that implies that the downside won't be as deep because they haven't come back fully, but it also implies that the recovery and the bounce back that we had seen in the third quarter, that will be mitigated going into the fourth quarter and possibly the first quarter of next year as well, right? One of the things we do worry about and have worried about for a long time and probably know with reasonably high confidence is that the virus is likely to propagate more actively in the colder seasons when people are more together. So therefore, you're going to have more social distancing, even if you're not going to have a full-blown lockdown. So that probably means that you have, less of the kind of seasonal travel around the Christmas and winter holiday season that you tend to have in the Western world, right? That's going to be, was held back last time around, not over Christmas, but over Easter, let's say. This time around, it's going to be held back over Christmas and New Year's. In a decent likelihood, right? So therefore, all of these factors are kind of weighing on growth expectations and therefore on return expectations.
Peter, I'd like your perspective on, that particular point. This is round two. The lockdowns so far aren't as severe, and most governments, businesses, and local administration now at least know what they're dealing with, unlike, earlier this year when it was all new and confounding. Do you think that will help mitigate some of the damage and that would be priced in as well?
Absolutely, and of course, even though the cases continue to spike, we're seeing less deaths here in the United States so far. But again, that's a good point because obviously the doctors know what they're dealing with. When we first were hit with the virus, it was in no man's land. And of course, many people died because they didn't know even how to begin treating them. And putting them on respirators that may have caused even more damage than just maybe treating them with antibiotics as you would treat a flu, because it was the unknown, obviously. But again, the fear here is that if you have partial lockdowns and entering the holiday seasons, that means that many people may cut back on family gatherings, and that means less spending, and that's where the problem comes in terms of consumer spending. Look, consumers will always spend for the necessities. We saw that during the March-April period when we were locked down. But will they go out and buy things that that they may buy with disposable income and are not a necessity? The answer to that is they'll probably refrain from that. And so that means that consumer spending takes a hit. And if consumer spending takes a hit, the economy takes a hit.
Let me come to Sharad Kumar Saraf and Madan Sabnavis. Thank you for your patience, but I wanted to focus initially on what's happening in the international markets and then turn to the impact on India. And that's logically the next question. We've seen that entire cycle start from Europe, and India has sort of followed the same pattern with our own specifics, but the same direction, right? A late start to the cases and then a build up and then a peak. We have now seen our cases beginning to come down. I'm talking about daily active cases, and that really is the fear. Mr. Saraf, from the exporter's perspective, what does this really mean? Because is there a fear that European exports or exports to Europe from India will get hit? If so, which are the most vulnerable segments?
Yes, ma'am. The situation is certainly scary because the cases of infection in Europe are rising pretty fast. And there are also cases of deaths rising fast. So the exporters, particularly those who are exporting to Europe, are concerned and worried. What may happen is orders may not be cancelled, but they would certainly be postponed. The issue that we are going to miss is the festival season buying. Now with the Christmas, New Year coming up, a lot of exporters were expecting to ship in the first week of November, but we don't know, in the next week or so, we may start receiving advice for postponement, and we are keeping our fingers crossed. But as on date, as we speak today, we are fine. Our shipments are going through, except for the problems that we are facing of container availability, problems of container movement from Punjab due to the farmers' agitation, and the shipping costs. But apart from that, the manufacturing is going on, the export production is going on, and the orders are intact. In fact, the orders are coming also. But this is a new phenomena, this increase in the infection rate in Europe, and that is now spreading in almost all the countries of Europe. It is not restricted to Italy or Spain or to UK, but France is equally affected, and now Germany is getting affected. So we are certainly worried, and we expect that there could be some fallout of this on our exports to Europe, which will affect meeting of our target. We wanted to at least reach last year's export level, but it could be difficult.
Europe forms pretty much about 19% of India's total exports and 15% of India's total imports. So there is going to be an impact there. Madan Sabnavis, what is going to be the impact on the recovery mode? We're speaking about what's happening in Europe now. It's going to get cold. We don't know what's going to happen in India. Right now, things are just beginning to pick up. The cases are coming down, your high frequency indicators are looking good, and there is some sort of optimism. Is there a fear at the back of the mind that we may follow down the same trajectory. That just because things are beginning to stabilize doesn't mean it's all done and dusted with.
Actually, there are 2 points out here. The first is that if we're having lockdowns in Europe, maybe in the US post-elections to some extent, what we're really going to see is that there's going to be a global slowdown to a greater extent. If you go back to the IMF World Economic Outlook, the one which came out in October, they had actually assumed that things have actually improved. So most of the forecasts which they had for the Western countries were better than what they were earlier. But now they may have to sort of revise their forecast. Now this becomes important for us because if I'm saying that the world economy is going to slow down more than what we thought in October, in beginning of October, that means that there will definitely be an impact on exports. The positive thing for India is that we're not an export-oriented economy. And while exporters per se are definitely going to get impacted, as you mentioned, I think on 15 to 20% of our exports do go to the European region. If you add the US, it will be another 10, 15%. So definitely our exports are going to be affected in case there are lockdowns, because that's going to mean slowdown in their economies. But I think the domestic part is what we will have to look at to see whether there is continuation of demand. The second point is, I think what has been admitted in the IMF World Economic Outlook and even here in India, we are talking in terms of the second wave coming at some point of time. Hopefully the government will be better prepared in terms of how to address this issue. I think one good thing is that the unlocking process in India has been in a very calibrated manner, which I think has bordered on caution, which has been good for us. But we need to be prepared to say as to what exactly are we going to do in case the infections once again resurge. And I think until the vaccine comes, I'm quite sure it's going to come around again. Hopefully the government will be better prepared and we should not be restraining activities. And I think we have learned our lessons that closing down economic activity is not a solution. To my mind, there will be localized shutdowns if at all we have a resurgence, which is going to affect our overall economic growth. So I think it's going to be the same pattern in India in case there's a resurgence of this virus in the country.
So Madan, assuming that this resurgence will not take place in other parts of the world, and it's happening in Europe, it'll maybe be restricted there, may not follow the same pattern in India and other parts of the world, would there still be a significant impact on India's recovery? Of course, on exports, perhaps to some extent, but otherwise, how would this affect India?
No, I don't think it will affect us very significantly in that case. Let's assume that we are putting this condition that only Europe is affected and nobody else. Then I would say our exports get affected, but given the fact that we are not an export-oriented economy, we are being driven by domestic demand. Whatever trends we have seen so far about the resurgence, maybe pent-up demand, where we are quite doubtful whether it's going to be sustained or not, I think that kind of a situation will carry on. So India need not worry in that particular situation. But I doubt it's going to be that case. It's definitely, we could be expecting the second round, because really none of us really understood how this virus spreads.
Absolutely. So, it's a very precarious situation right now. So far, markets have overall been going on a very different trajectory as compared to the economy. Is that happening once again is the question, because we have actually seen economic indicators improve, not just in India, but in the US as well, even globally. Markets are now perhaps looking at some of that optimism getting derailed if there is a series of lockdowns that followed. The other question is that will policymakers and decision makers go down the lockdown route again? Have they really been as successful as they would have hoped for? Have other ways now been found? Because we now have some experience with coronavirus and COVID-19. Our doctors know better. So that's the only thing that we can hope for, even as markets go through the bloodbath that they are today. I want to thank all of you for joining us on the lead story this evening on the India Development Debate.